Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Let me start off by telling you that next Tuesday I will be on BNN from 11 to 11:30 talking about the overall market and the Canadian banks. So I would welcome you if you tuned in. Turning to the market, this past week has been nothing but almost a dead sideways movement for every single one of the fangs. So what do we make of this? Well, absolutely nothing is the correct answer. The market and the fangs are marking time. What this means is that essentially the SVA methodology has essentially placed, if you like, a buy rating on every one of the FANG stocks. Even Tesla has been hanging in for any viewers who may be holding those shares, although it remains a sell from my point of view. Now, if there is a buy on 7 of the 8 FANGs, then I think that you know what this must imply for the market as a whole, meaning the NASDAQ 100 and the S&P 500. As the fangs are not going to go their own way without company. For all those bears who would like to see a market sell-off, not today, not this week, and not... This does not mean that I have nothing to say about the fangs today, however, as we will see in a moment. For now, let's take a close look at the fangs and what went on in this past week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you'd like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, well, let's start off with Apple. And why not with that huge announcement just very, very recently about the big buybacks? Well, first of all, what do those buybacks, or what would those buybacks mean? Well, for a long time, Apple did not buy back stock, and the stock remained under its bubble price. But when it started to buy back stock, what happened is, which you can see, of course, in looking at the trend of the balance sheet, that the trend of the balance sheet went down, but the trend of the ROE, the dotted line, okay, and the earnings went up. And with it, so did the valuation of the stock. However, there got to be a point when this company stopped buying back stock. And what happened? Well, the stock kind of rolled over a little bit, and the stock began to significantly underperform. Well, that appears to have triggered quite a reaction from the company. Now, we just got the balance sheet in, which you can see right here with that little red triangle. And so we took a look at the at the previous quarter. And what did we see? Well, we see that the book value, the book value has essentially leveled out, not fallen as one might have expected if they had started this buyback procedure, but just leveled out. So, is past prologue or is real change lying ahead? I'm going to review this question in a moment because it is very important and very significant. Amazon just continues happily to thread the needle. Doesn't look like anything, does it? Well, the balance sheet has been rising by some 30% per year, so just hanging in is very positive. If we go to the beginning of this trend, look what happens here, eh? Look how far actually the stock has risen. So just hanging in is very significant, and with a balance sheet rising at 30% a year, that's pretty good. Alphabet has almost reached its bubble price on superb earnings, now share buyback, and the beginnings of a dividend, although I will have to say that an 80-cent dividend, given their earnings, is not all that significant. However, it's getting up, has done very, very well, and it's getting up to its bubble price. And the question is now, what? Well, if we go back over the long term, we will find out that the bubble price was the previous all-time high for the shares. So one thing that I hope that you have learned from FANG Friday is that when stocks get to previous long-term highs, they often have a very, very difficult time getting through there. So that may be the case again with Alphabet. Microsoft, very, very much like Amazon, eh? Yeah, it's just been kind of hanging in there just underneath its HB2 price. But look at the slope of that balance sheet is 27%. So again, hanging in at the HB2 is not all that bad. Netflix, very peculiar in a sort of way. It had a tremendous earnings surprise, and the stock just gapped up. Had another big surprise, the stock gapped up. Another lovely surprise, and the stock gapped down. Well, what's the problem here, eh? Well, as it transpires, if I now click and get the ROE, we see that the ROE has been steadily increasing, and that suggests very much to me, therefore, that setback that we got is probably from the HB2 is probably just a temporary setback, maybe a kind of a bridge too far, but nonetheless, from a value point of view, probably their stock remains very interesting. NVIDIA has just been sort of trading along its HB6. That's 33 times its book value. And what is, of course, of interest here is that the earnings and therefore the fair market value is projected to slow down. Now, why is that important? Well, now if we do a price to book, again, what we see now is that the ROE is starting to fall, and we know that stocks whose ROE is falling tend to be dragged down. So I will be watching at that HB6 price very carefully to ensure that the stock does not break down, which would trigger a sell. Turning to Tesla, I had a sell on the stock, and it broke down through its bubble price, and we almost sort of had a double confirmed sell. But a trip to China kind of reversed that, and the stock roared up to its HB1. However, I think now that the market is beginning to kind of rethink, what does this really mean? If anything, from my point of view, the stock remains a sell. To Meta, we almost had a confirmed sell on the stock. However, the stock having declined so quickly, despite superb earnings, we kind of held back a little bit, and a good thing because the stock has kind of clawed itself back on side. But what's the real underlying story here? Well, if we take a long look at the stock, what we see is that Meta peaked at its bubble price once, twice, 3 times, and is having a terrible time actually trying to break through despite excellent and rising fair market value. So we will have to see how this stock hangs in now. So to briefly recap, What happened last week, and more to the point, why? I was initially pleased to see Apple turn around and start to rebound. It has some work to do to retrace its footsteps back over its HB6, that's 33 times book, but I do anticipate that the coming share buybacks could render this a moot point. If those structural breakpoints head lower once again as the equity on the balance sheet is reduced, and axiomatically, of course, the return on equity heads higher. Now, I was disappointed to see that in the latest quarter, just reported, that the only thing that happened was that the equity leveled out. They have not started the heavy buyback process, and the equity did not decline, as must occur if the company wants its valuation to start to climb once again. I hope that this is not a case of watch what I say and not what I do, because then the market will cease believing that the company is serious about its buyback intentions. I should add that it must take a lot of courage to really trash your balance sheet, as some companies have done, in order to get those extreme valuations. Apple has exhibited some of that over the years, but has never pressed the point to the extremes that some companies have achieved. I remain bullish on the stock now that it has made that commitment to buy back $110 billion of the shares, but I'm starting to wonder just a little bit just how sincere that Tim Cook actually is. It's been a good week for the FANGs in general, period, with not a single exception. Meta does look a little wobbly, but has hung in at its bubble price. With no signals and everybody hanging in, even my personal bête noire, Tesla, looks to have a positive start to the market going into the summer. Amazon, Alphabet, Microsoft, Netflix, and Nvidia are staying within their current boundary trend limits, and I would have no reason to do anything but keep a hold buy on these stocks. But you do need to watch to see what happens if, as, or when any of those stocks reach their next higher breakpoint, or lower in the case of Nvidia. That leaves Meta as a bit of a dangling participle, although it has scrambled back on side. Now, there are two things for you to keep in mind. First, subscribers to our SVA service can very easily assess the risks that they are taking when they own any stock that looks like one of these. That is, a stock which is trading well above its fair market value measure. This issue has always been resolved in the past by the share price falling down to its fair market value measure, and often below. But the operative words are sooner or later, often later, especially in bull markets. Second, however, that means that in bear markets, you should shoot first and ask questions later. That is, sell first when you get an SVA sell signal and find out why later. You will not like the answer. You and I, we have already had two powerful examples of this phenomenon, Meta and Netflix, in the past 3 years. So stay tuned and never let your guard slip with speculative stocks like the FANGs are today. Remembering that, allow me to observe that if you are holding other highly valued stocks, you may seriously wish to consider a subscription to our service. It may well be the cheapest insurance that you ever took out. Anyway, that's all for this week. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday if you don't see me first on BNN on Tuesday.